let's talk just real quickly and briefly about my very favorite subject, the banks. So I've got an article here from the Daily Hodl from the 26th of April. Wells Fargo to pay $185 million to customers in massive new settlement. This is a new one. They got a couple ongoing right now that are pretty juicy. This is a brand new one. Here's who it will benefit. So Wells Fargo customers may be eligible to be beneficiaries of a $185 million payout from the bank following the court's approval of a massive class action lawsuit settlement. A lawsuit initiated last year claims that during the COVID era, why is this 5 years later? I'm reading this. Wells Fargo issued mortgage forbearances to its customers when they didn't want them, causing unnecessary hardship while negatively affecting credit scores due to halted payments. So Wells Fargo, if I had a mortgage with you, which I did not, I will not keep a penny at Wells Fargo. And Sam, I won't even put you on the spot and ask if you do, because that's none of my business. So back to this article. While Wells Fargo did not admit to any wrongdoing, the bank has agreed to pay $185 million to affected customers. Let's break that down for here. Wells Fargo's like, we didn't do anything wrong. We're just doing business. You didn't do anything wrong. You're going to go ahead and shell out $185 million because you didn't do anything wrong. I think you're full of something. I think you're full of something over there. According to top class actions, Wells Fargo customers who had a mortgage placed into COVID mortgage forbearance without informed consent between March 1st of 2020 and December 31st of 2021 are eligible for compensation. So my understanding when I did a little cross reference on this article is that if you expressed that you may run into difficulties with your mortgage, they just automatically suspended your mortgage. What the heck is going on over at Wells Fargo? And you know what? Something for you kids. When you get your $185 million, is it the CEO of Wells Fargo? Who's going to come up with the money to pay $185 million to all of us kids?
They'll take it out of all the interest that they don't actually pay in their savings accounts.
Correct. I don't want to spend a lot of time in the bank, so I'll make this quick. We are on a fractional reserve system. The government has told the banks, you have to keep some money in reserves in case there's a modern day run on the banks. So on March 16th of 2020, right around the time that Wells Fargo was, jockeying around your mortgage, the government said you don't have to keep any money in reserves. Let that sink in for 1 second. If you're new to the show, listen to me for a second. In March 5 years ago, the government told the banks they don't need to keep any reserves. They've never put the reserves back on. Even when they told the bank they had to keep reserves, it was 10%. So it was a joke, but now it's 0%. So every bit of our money can go into mortgages and reverse mortgages and credit card loans and derivatives and mortgage-backed securities and collateralized debt obligations and whatever the heck they want that we don't understand. So there's no money. I want you to know that there's no money. And if you think that you're, feel warm and fuzzy because, well, I don't care. I keep under $250,000 per account. So I've got the FDIC backing. I've got insurance. You know how much the FDIC insurance covers of our money? 1.2%. If you go onto their own website, fdic.gov, and look up statistics at a glance, and you go into the deposit insurance fund, it's 1.2%. So I just want to let you know the banks are, they're sketchy to say the least, the something about them.